I read his letter. I agreed with everything that's in it. This is a great service, great company, free cash flow, tipping point, subscription model. There's a lot. I agreed with all of it. It's not a buy for me here because we've had a negative inflection point in terms of the most important metric, which is subscriber growth. We may well have a one-quarter head fake here, in which case, if that in fact is the case, Ackman's a genius and he's come in and he called the bottom on the stock. I just don't have that kind of conviction. To me, this is somewhat similar to Priceline or Booking.com, which was a great, phenomenal stock, great, phenomenal company. It left premium growth and it became a so-so stock. That's what I sort of expect to have happen now with Netflix.
Is part of that linked to whatever valuation multiple it was on before this pullback, and perhaps still, was it closer to being in the Peloton camp of valuations than, say, the Microsoft camp of valuations?
Well, it was somewhere in between there. So, look, the market was expecting, in terms of units, they were expecting 20 to 25 million subs to be added every year. It looks like that number is more like 15 million. Again, that could be a head fake, but that was the expectation, which means in terms of the numbers, you had double-digit growth year over year in subscribers, the single most important metric. That would allow a premium multiple. Now that you've gone single-digit percentage growth in terms of the sub ads, then look, the way I math this out is I think it's $15 in earnings they can generate in 2023, consistent 20 to maybe 30% earnings growth. So you put a 20 to 30 PE on it, downside 300, upside 450. The stock's at 375-ish now. You're kind of right in the middle. It seems like a reasonable hold to me. It's a great asset. So I really hope that they've got another growth curve initiative coming up, and in which case bulls can get right back in on the stock. But I got to see the subscriber numbers revive before I become a bullish again.
So you're not a fan of Netflix, Mark. Any of the other mega cap tech stocks that have gone on sale look appealing to you, given they're in the crossfire here with the Fed moves?
Well, Sarah, you talked about a company earlier that I think is kind of very interesting. I mean, Netflix has been a phenomenal stock for a variety of reasons. I think some of those reasons actually apply right now, right here to Spotify. So I know it's controversial today because of the Neil Young, Joe Rogan controversy. But here's an asset that's still earlier stage than Netflix. It's a couple of years ago. It's also got a freemium business model. And that may be what's really limiting Netflix's growth in international markets, that the paid subscription market may just be limited in parts of Asia Pacific and Latin America, Middle East and Africa. Spotify's moved around that by longstanding having a freemium business model. And I think they're at a gross margin inflection point this year. If I'm right on that, I think you could have really nice outperformance from a stock that's been beaten down, below 200. I find Spotify very interesting. I like the setup here. I like the stock.
Mark, I know there's an enormous amount to Amazon, but it's got some overlap with both Microsoft, which bounced after earnings, and Netflix, which, of course, did not. Are you worried ahead of Amazon's earnings report?
Yes, and one thing in very particular, I've been signaling this to investors and on CNBC for a while. The street's too high in terms of operating income for the March quarter. Way too high, like we thought they were for the December quarter. I think the market's starting to appreciate that. Look, I think there's a recovery in the company's profitability, especially as we go into the back half of 22. I just think the profitability needs to be kind of more back-end loaded than what's in consensus numbers. So we may well have a hiccup on the print. But other than that, you want to own Amazon when it's dislocated like this. This is one of the 2 or 3 most high-quality assets in the internet space, along with Google and Facebook. And you're going to have this the investment return on all this distribution center spend that they had this last year. You want to be long Amazon when you get a big correction like this. I'm a big buyer of Amazon right here, right now.